Hey, welcome back. So, there's a number I need to tell you about right now because if you don't know this number, you could make a really costly mistake in the next few days. The number is $76,800. That's Bitcoin's realized price. Basically, the average price that every Bitcoin holder across the entire network paid for their coins. CryptoQuant just flagged it as a near-term ceiling. Right now, we're at $74,658. We are $2,100 away from that level. And I will explain exactly what that means and what you should do with it. But Goldman Sachs also just filed for a Bitcoin ETF this week, the last major Wall Street holdout, and I want to talk about why that actually matters more than most people realize. Four things today, all genuinely useful. Let's get into the chart first, and the quantum story, I'll get to that towards the end because it directly affects your coins. Okay, chart first, and I'm going to keep this clean and simple. Look at where we are, $74,658, and that red line up at $76,800. That's the realized price. Here's what that means in plain English. It's the average price across every single Bitcoin that has ever moved on the network. Think of it as the market's collective cost basis. When price approaches that level, people who bought higher and have been underwater start breaking even. And when people break even, a lot of them sell. That's just human nature. You've been sitting on a loss for months, price finally gets back to where you bought it, you're relieved, you sell. CryptoQuant flagged something specific this week. Exchange inflow spiked to 11,000 BTC per hour, the highest since December, and the average deposit size hit 2.25 Bitcoin, the highest since July 2024. The last time this happened was January, right before Bitcoin dropped 400k to around 60k. Now, I'm not saying we're about to crash. CryptoQuant also said daily realized profits are only at $500 million right now. Price stops historically happen when that crosses $1 billion. We're not there. So here's what this means practically. If you've been holding and want to take a little off the table, 75k to 76,800 is a reasonable zone to lighten up slightly, not sell everything. Just be aware that a lot of other people will be thinking the same thing at that level. And if you're looking to add a pullback to 70k to 72k makes more sense than chasing here. The RSI is sitting around 60, healthy, not overbought. There's room to improve. The 200-week EMA at 68k is holding as support. The 200-day EMA at 83k is the target if we get through the ceiling. That's the base case path. Now, Goldman Sachs, because I want to explain why this is actually a landmark moment and not just another headline. If you want to trade Bitcoin around levels like this, I personally use Bitunix, no KYC, clean platform, first link in the description. Goldman Sachs filed for a Bitcoin ETF this week, and I know at this point it feels like every bank is doing it, but Goldman is different. Goldman was one of the most vocal Bitcoin skeptics on Wall Street for years. Their analysts questioned its intrinsic value, their executive publicly doubted it, and now they're filed their own Bitcoin-linked ETF using an option strategy. Look, at the sequence of events in just last few weeks, Morgan Stanley launched their Bitcoin ETF on April 8th. Goldman filed this week. ETF total AUM just crossed $97 billion, highest since mid-March. Year-to-date flows are now positive at $245 million after months of outflows. Yesterday, zero ETFs recorded outflows. Every single product was in the green. BlackRock has been on a 5-day inflow streak totaling $696 million. Morgan Stanley's brand new fund has $84 million in it after just 5 days. And now here's the practical takeaway on Goldman. Every time a major Wall Street firm enters this market, it explains the pool of money that can flow into Bitcoin permanently. Goldman's advisors manage trillions in assets. When they can recommend a Goldman's branded Bitcoin product, those clients buy. That's not a short squeeze, that's not a ceasefire bounce, that's structural new demand that compounds over time. And the MVRV Z-score is at 0.69, still climbing from the 0.39 low we saw a few weeks ago, still in historically undervalued territory. The on-chain backdrop hasn't changed. This is still an accumulation market by the data. Now, the Bitwise gold comparison, because this one reframes what Bitcoin actually is and how big it could genuinely get. Bitwise CEO said something this week that I think is worth remembering. Gold's total market cap is around $33.7 trillion. Bitcoin's is roughly 1.4 trillion right now. So Bitcoin is currently about 4% the size of gold. His argument is that the Iran war revealed something new. Iran proposed charging a toll in crypto for ships navigating the Strait of Hormuz. A nation state under maximum economic pressure reached for Bitcoin as an alternative financial rail. Not the dollar, not gold, Bitcoin. If Bitcoin only captures gold store of value role at 17% of that market, Bitwise estimates it reaches around 1 million per coin. If it takes on a currency role for nations locked out of traditional financial systems, the addressable market goes much higher. I'm not here to promise you $1 million Bitcoin, but a sovereign nation using Bitcoin as actual financial infrastructure during a crisis, not as speculation but as working tool, this is a real-world validation of the thesis that matters for the long term. Now, the quantum thing, quick but important. A proposal called BIP 361 was filed this week. The idea is to eventually freeze old-style Bitcoin addresses that quantum computers could crack in the future. Around 34% of the entire Bitcoin supply sits in these older vulnerable addresses, including Satoshi's stash. Here's what you need to do right now. Check what type of address your Bitcoin is in. If it starts with number 1, that's an older style. If it starts with BC1, you're on a modern quantum resistant address. Most hardware wallets and modern apps use BC1 by default, but if you've got old wallets, worth checking. The community is pushing back hard on this proposal, calling it confiscatory, so it's nowhere near becoming reality, but it costs you nothing to move to a modern address now. Okay, let me bring this all together into something you can walk away with. I use Bitunix for my trades, no KYC, straightforward platform, link is in the description if you want to take a look. Alright, here's everything from today in 4 simple points you can actually use. 1. Watch $76,800, that's the realized price and the near-term ceiling. Don't chase above it if you want to lighten up a little. That's the zone. Better ads are on a pullback to 70k to 72k. 2. Goldman Sachs entering is structural, not a short-term price catalyst. A new permanent source of demand being added to this market compounds over time. 3. The Bitcoin bigger than gold thesis just got real-world validation. Keep that in your back pocket for when people ask you why you hold Bitcoin. A nation-state used it as an actual financial infrastructure during a crisis. 4. Check your wallet address. If it starts with 1, consider moving to a modern BC1 wallet. Not urgent, not panic, just good practice. My position, holding everything, not adding aggressively right here because of the exchange inflow warning at 76,800. If we get a clean close above it and hold, I add. We pull back to 70k to 72k, I add there. Either way, I'm comfortable. Base case 76,800 gets absorbed, selling pressure exhausts, we push through toward 80k and the 200-day EMA at 83k. Risk case exchange inflow warning plays out, pull back to 70 to 72k, dry powder ready there. The one level to watch this week is $76,800. Anyway, that's the breakdown for today. Let me know what you think in the comments. I read all of them. Thank you so much for watching and I will talk to you guys in the next video.